Hi everyone, this is Mitchell from Option Today we're going to be going over Relative Strength Index, otherwise known as RSI. It's a very popular momentum indicator used by traders. The formula would be 100 minus 100 divided by 1 plus RS, and RS is going to be the average gain of up periods during the specified time frame, or average loss of down periods during the specified time frame. The default time frame is typically 14, as in 14 trading days, but as you can see down here, RSI values will range from 0 to 100, but the ones and you can adjust these, but the ones we look at are 30 and 70. A lot of people move them from 20 to 20 and 80 to provide a kind of better reading, or more accurate reading I should say. But the way it works is this. So stocks with an RSI above 70 are considered overbought, and stocks with a RSI below 30 are considered oversold, or undervalued. So essentially the idea is that once it reaches below that point, that you're going to see a correction there, and we see it slightly here with it dipping over, or coming over slightly. That's 70, and we start to see a pullback there. One thing to be wary of: one major bearish signal using RSI is when you get, say, a peak in RSI right here. It looks like it's about 66, and this is extended hours, but that's one trade, kind of throwing it off in the morning, probably a opening trade. And then we come over here, we see a new high, but the RSI down here is lower, and then immediately after that we see a huge drop over the next few days of 63 points. So that's a major signal to look for. One other thing to be wary of is these huge movements in price can affect the RSI greatly, like that, and kind of be false. This is not a buy signal here, but it may look like it in that RSI. So as with any other technical indicator, we need to use them in conjunction with others. We can't totally rely on this one indicator. So that's this is a very good indicator to use. Like I said, you can play around with these numbers to get stronger signals, making them 80 and 20, but you're gonna have less trades that way. And by doing that, we can essentially try to avoid those false signals. So that is what RSI is all about.